Q&A session. So in case any questions come to mind during the session, please share them through the Q&A tab, and we will address them at the end of the session as much as possible. So our first attendee, our first panelist, I'd like to invite Carl Dowling from CBD. Carl, if you're there.
Yes. Good afternoon, Gavin.
Hello, Carl. How are you?
Good, thank you. Good.
Excellent.
Enjoying the webinar live.
Great. So, Carl, obviously there was an announcement last year, pretty exciting. I certainly think, and I know that it's exciting for a number of different reasons. The UAE government obviously increased the new decree, or changed a degree, should I say, around foreign ownership for onshore companies, where it would go from 50% to 100% for foreign onshore businesses. I guess with that in mind, I'm interested to ask you a few questions around that. And I guess the first one is, look, what has driven the change in the government's policy to want to make this change now?
I think that's a $1 million question. I think it's derived from, I think a lot of people that will be on the webinar today would have moved here 10, 15, 20 years ago. The UAE was much more of an emerging market back then.
Yeah.
It's quite developed now. It's still developing, but the GCC neighbours are catching up quick. So Saudi, Qatar, and Oman are developing themselves quite quickly. So I think the UAE just wants to keep the competitive edge, essentially, as the most attractive destination for international investment in the Middle East.
Yes.
It's always held that spot for at least 20 plus years, arguably. But I think they want to maintain it. Now, with that, change will come. We had the FDI law come through in 2018. That was seen as quite progressive, but I don't think it drove as much investment as one would have hoped. So I think that whilst it's a wide sweeping change, we still have yet to see the meat on the bone in terms of, will it be a removal of 51% across certain activities? Will there be a reduction? So could it be 40%, 30%, or 25%? So there's still a bit of detail yet to come. But nonetheless, I think it is just about keeping the UAE competitive.
Fair enough. And I think that, it's still early days in relation to that change. So I think how 2021 plays out with this, there'll probably be, evolving parts to it. What do you think those changes bring for, I guess, for international companies, from a practical perspective that might want to set up here?
Well, we need to wait, unfortunately. We need to wait for the cabinet to come out and identify the activities. So whilst the announcement that removal of 51% local ownership came out, we don't know what is going to come in its stead. So as an example, Oman has 30% local ownership requirement. In Saudi, the large majority of activities have 25%. So the answer to that question, you could easily say, is worth several $1 billion. What will be the full position?
Hello, Carl? Sorry. Hello, Carl. I think we lost you for a little bit. But we've lost you for a little bit, Carl.
Oh.
That's better. Sorry.
Okay, sorry. I'm sure you did. And what we have liked seeing is that they're taking the initiative and looking to move forward, where the headlines are steering us all towards the ownership requirement, which is, of course, most important to a lot of businesses. There are some gaps in the discussion that aren't really catching any conversation at the moment. And a perfect example is consultancies. So if you're a consultancy or service-based business, for most activities, you can't actually set up a limited liability company onshore. The only options available for an investor have unlimited liability, so there's no way to protect your personal assets. The only workaround is to go offshore. and that typically then means the investment is domiciled outside of the UAE. So you've got this double-pronged issue of the FDI being domiciled in another country, and then the additional hurdle of having a two-layered corporate structure. So what I personally look forward to is hopefully seeing that LLCs will be open to consultancy and service-based businesses. So they can set up the business in the UAE, direct mainland, own it 100%, but then protect their personal assets. And I think that'll be a game changer and bring a lot of investment, direct and indirect, back into the UAE.
Oh, great. And what, I mean, you sort of mentioned that because you were mentioning saying that, you know, in the current situation, the consultancies, for example, you're saying that effectively they have to go, you know, offshore. So, you know, with this change, do you foresee that this is going to have any implications for obviously the free zones?
Yes. It's it would be impossible to say there wouldn't be a little bit more competition between the two. But it's the lie of the land, isn't it? If you can have 100% ownership on shore and working in the UAE, why not go on shore? But that then derives the answer. If your business is a HQ for the Middle East, maybe Middle East and Africa, then you don't necessarily need a mainland business, which can more often than not come with more rigorous requirements, depending on the activity, of course. But you would always see a regional HQ sitting quite comfortably inside a free zone. So I think you can still find that there will be a natural progression to one or the other, depending largely on whether the business is operating in the UAE, so selling their goods and wares direct to the local market, whether it be in a mall or through third-party suppliers, or is it just to facilitate like administration, back office, or distribution of products throughout the region? So I think there will be competition. There's no avoiding it, but it won't be a clear cut. There's no need for a free zone. I don't believe that will happen at all.
And again, what's you know, for the new system, obviously, you know, the 100% foreign owned. What's some of the major benefits that will come with that, or do you think? Obviously, apart from 100% ownership from shore.
It's a slight advantageous position. I think we just need to see what the meat on the bone is. And sorry to go back, there's just too little information out in the market as to what exactly the changes will mean in a practical sense. When you have an onshore business, there is a large reliance on the Emirati partner for sponsoring employees, dealing with government departments. With having 100% ownership, you no longer need that local interaction at all, where the government departments deal with you directly. We're yet to see. So I think we need to wait and hear what will happen there. Now, where this conversation leads is removal of local ownership. What will come in instead? So there could be increased obligations for foreign companies setting up here. They would most likely want to see more substance in the business that is set up. And that you could go back to 2009, 2010, where you're still required to have 300,000 dirhams in your bank account before you got your trade license. We may see these requirements start to come back in.
I was going to say that sort of obviously is going to tail into the back end of this webinar as well when we start talking about economic substance reports. So interesting. Just a couple of quick questions. You know, what could be some of the concerns that people might have if they're wanting to go from a 50% to a 100% you know, ownership? Is there any sort of, you know, concerns, you know, that we're looking at, or is it still kind of early to say?
It's clear to say, but it's the right time to start looking at what arrangements you have in place. You need to take a holistic view and look at whether you do have a passive partner that has little or no interest to maintaining position as a shareholder in your business, and they may exit cleanly, or you may want to look at it as potentially there's been over time some commercial benefits to having the partner involved. So again, removing the idea that you must have a single 51% owner with the law, the requirement by law being removed, maybe you would keep 5 or 10% with that local partner just for assistance in the right kind of influence that they can bring to the table. The other weighted approach that you need to be cautious of is, again, going back to the FDI law in 2018. By allowing 100% foreign ownership, foreign companies would need to show larger capitalization requirements. They would have a high amortization quota. These influences really hit the bottom line. And you can understand, I don't argue at all with the UAE's position there. If you have 100% ownership, if there is no corporate tax system in place, there must be a benefit to the country as to, why they're giving you all this, or what do they get back in return. So I think it will be an accountant's favourite month of the year to start going down and pulling this apart and seeing where you end up. I would say if you have the opportunity to go 100% foreign owned whilst you're currently 51% locally owned, you would probably want to take up that option, but would you go the full 51% remove? That's yet to be discussed.
And I guess finally with that is, through this new rule, my understanding is, but you can have clarity, are there any industries that are exempt from this 100% foreign ownership option?
Well, at this point, I'm at a disclaimer that this is an opinion that I'm about to give. I have no insights. There's no crystal ball that I can offer here, but from my experience, I think there's some low-hanging fruit that will most likely come to see 100% foreign ownership quite straightforward. Areas such as like restaurants. If you have a single restaurant, you can own it 100% as a foreign national. But if you want to have a branch 2, 3, 4, you must convert to an LLC. So it makes sense that they may just allow restaurants to go foreign owned. Areas training would be one where it is IP based. I would expect that could be at the top of the list. But I think there are several areas where we can understand that they would want to take their own competitive markets for good reason. Insurance, real estate, labour supply is a very important one. I think you will see that will. I'll put that on the end of the most unlikely change with much significance, because at the end of the day, it's substance. You do also want to know that if you're getting a large insurance policy through a broker that they haven't set up overnight, they're going to be there in 12, 24, 36 months time to service you.
So look, we're going to hand over, but I did realise, and my sincere apologies, Carl, I didn't give you a minute to kind of introduce yourself at the start. So I know it's at the end of the questions. Did you want to explain to the crowd, and I apologise for that, just a little bit about CBD?
Yes, no issue. I have lived in Dubai for 14 years. I founded CBD just over 7 years ago. CBD focuses on helping foreign companies set up in the UAE and broader GCC region. We specialise largely in the onshore market and assist our clients with the corporate services surrounding that accounting.
Are you there, Carl? We might have lost Carl. Well, Carl, look, thanks very much for that.
Sorry.
Really appreciate it. And I'll get you to come back after when we get to the Q&A. Next, our speaker is Joe Hepworth. And Joe, unlike I did with Carl, I'll give you a minute to introduce yourself, and then we can talk about the next kind of common theme, FDI.
Great. Thanks, Gavin, and thanks for having me on. So my name's Joe Hepworth. I've been here for 12 years, and actually Carl and I used to work together about 7 or 8 years ago. So we know each other from quite some way back. My company is OCO Global. We're a global trade and investment economic development consultancy. So we work with public and private sector all over the world, helping to develop inward investment strategies, implement them, doing FDI representation, and all manner of market entry and sort of export support services. So we both work with, with governments promoting, foreign investment into their jurisdictions. We represent them, and also work with companies wanting to understand where they should be and why they should be, and how they should do it. And at that sort of point, we might be then talking to Carl about, well, how do we actually set them up?
Thanks, and it's certainly an interesting area. What I'll do before actually the first question is I'll just ask them if they can show the poll results from the earlier poll, and as we ask you some questions, Joe, we may actually run through some of these because I think they're pretty interesting. But just firstly, how do you think this change in ownership might actually, I guess, change foreign direct investment?
Okay. Well, look, and I think Carl's given a pretty good intro and initial answer to that, in that this is a competitive market, and particularly in the last, the full figures for 2020 haven't come out yet, but estimates are that the global FDI projects are down about 40% in 2020 versus 2019.
Yeah.
So you're coming in a sort of a backdrop of lower demand, a more competitive, more aggressive supply, if you like. So the UAE has to up its game and make sure, not least from a regional peer competitor standpoint, where the likes of really all the GCC countries have all sharpened their pencil in terms of foreign ownership, residency, and other factors that support and encourage FDI. So, look, it is positive, and it's absolutely necessary at this juncture of where we are in the world with everything that's happened in the last 10, 11 months and COVID.
I was going to say, and that echoes actually, one of the poll questions that we asked, which was, is the government's changing this ownership? Do they perceive that as a positive move? And it was pretty overwhelming that circa 50% said yes, 100%. So I think that it is allowed that step in the right direction. Do you foresee any specific, whether it's industries where there'll be greater FDI in 2021? I know it's difficult to tell on the back of obviously COVID, but where that could be, and why, obviously.
Sure. Okay. Well, look, I think the kind of the easy answer is that I think the numbers this year are going to look great in relative terms because 2020 was so bad. So
correct.
Be wary of anyone who's doing their sort of reporting, year-on-year figures of we're up 40, 80%, because you'd hope you are after, and obviously that's actually, with a great big caveat that we're not out of the woods yet by a long way, obviously, and we could actually see, but I think there's reasonable confidence that things are progressing for various reasons. Again, I think Carl sort of touched on a couple of these that, and you did yourself. Clearly there are certain sectors and certain industries that are on the sort of the protected list or the sort of restricted list, whatever you want to call. So obviously there's not going to be an impact in those areas. I think one of the things you will see here, and it's not particularly related to the change in the 100% rule or the 51% rule, whatever I want to say, is where is the capital flowing at the moment?
Yes.
And the capital, both private and public, and all the rest is flowing into technology. It's flowing into sort of innovative companies, and clearly these are the companies that are growing at the moment, the companies that are thriving, the companies that have by good luck and good judgment have got business models that have survived the last year and actually have been developed by the last year. So I think the innovative, I'll call it the innovative industries, because that tech sector is across, there's everything. There's med tech, insure tech, whatever. You've just had a tech suffix to it, and that's certainly what we see from our clients. Yeah. And the input we're getting, where the sort of the FDI programs we're engaged on, it's looking for those companies, and then back to my previous point, everybody's after the same slice of cake here. Not these companies can't be everywhere. So I think you're going to see a lot of movement there. Also in the sort of the green economy, new tech and clean tech. I wonder as well if we might see a bit in, it's not necessarily you could probably classify it FDI, but in sort of distressed assets, or sort of, companies, foreign companies looking at opportunistic projects to come in because they see that there's something here where they can come in, and the costs for doing so are significantly lower than a year ago.
Well, I think, and you're spot on. I think I'm pretty sure I read a report that there was a US consortium that brought one of the EMA, I think top floor, entities that was only about 4 or 5 weeks ago, right? So back to the point. I think the question on that is, I think there will definitely be acquisitions that could be acquired, which I think is obviously very, very good. While yes, there might be a lot in those fields that you originally sent, there'll still be quite a lot in the other side because maybe people are looking to add to their portfolio.
Correct.
One of the questions that we put on the poll as well, and again, it kind of comes back to this, is we were asking people, would they have more confidence if there was a 100% foreign-owned onshore business? And again, 50% of the respondents all said 100% yes. So, again, I think that's a step in the right direction. I think it shows that it will lead to, I guess, foreign direct investment and investment that will help to grow the region and the businesses. And it's a slightly outside question, but how have the international, councils, from your perspective, reacted to this and then gone back to their own sort of, public to sort of explain about this sort of, a different trend?
Yeah, that's an interesting one, because I think, as you've already touched on, the issue is that until the details are known,
yes,
there's a headline here, but there's not the text underneath. And
correct,
I think,
yes.
Whether you're a lawyer or a company setup firm or investment advisor, wherever you are, you've got to be very careful. I think there's undoubtedly good news that we're all sharing here,
yes.
but inevitably the devil's in the detail, and until that's shown. So for example, we had when the news was announced, and we put out a few blogs and news pieces on it and things as sort of commentary on it. But then you got people coming back straight away, as you do, say, oh, what about this, and can I do this, and can I do that? And until those those finer points have worked through, and Carl sort of touched on a lot of them. But for example, at the moment onshore, whether you're a branch or an LLC, your employment structure, your visas are explicitly tied to your sponsor, your
correct
sponsor or service agent. Now, if we can all go 100%, or we don't need service agents or sponsors anymore, does that mean I'm now the sponsor as the GM of the business, or whatever? And do I want that responsibility of going to the, representing at the Ministry of Labour? So again, like Carl said, it might be that we can go to majority, but do you want 100% or above a certain threshold? If that then opens up other liabilities or responsibilities that actually you're quite happy at the moment to pay a service agent or a sponsor for. So, I mean, I think the question is there. I think the good business councils, the good sort of chambers and things, I think have done a good job in saying, look, things are happening and watch this space, but haven't over committed because nobody really knows yet.
And again, if I top and tail back to the original polls, when we ask people who already have an onshore business, would they consider swapping? Actually, there was only a sort of a 10 to 15% difference, and I think that probably bodes to people who are already here because they're already into that structure, and also, to your point, there's still probably a lot of finer details that need working through. I think one of the last questions I've got, Joe, and I actually read this in one of the articles. I was doing a bit of research. So slightly outside, but will this change, or could it possibly boost, IPOs for the stock market in the UAE?
I think that's an interesting question, and I sort of had to think about that as well, because it's not an obvious. I don't think we ever really get that coming across our radar as companies looking to sort of go public here.
Yeah.
So I don't think it's ever really been seen as a place for British or an American or Australian company to come and raise capital. You'd argue, though, that this does support that, because obviously, so now, and I think sort of as part of that, anything that adds more liquidity to the financial system, as you guys well know, is going to be positive. Obviously, in the last week we've seen foreign ownership levels, and I think in the major telcos here in DOWLING, so that being raised, so you can get sort of that more institutional money into foreign entities. So, it's not an area I know much about actually in the UAE, but clearly anything that, whether it's private capital or institutional or whatever, that helps gives this capital a home, if you like, and you can take on equity, and is bound to be positive. But I still think we're probably a long way from it being seen as a place to go and list.
Yeah, no. Well, like I said, I thought it was a bit of a curveball that I threw out there, but certainly from reading a couple of articles, it was interesting in reading some of the idea behind it, in the fact that your shares that you can then list will shift from a 30 to a 70% of that business, and so it does, down the line, who knows, it might pay some dividends.
Yeah.
Joe, look, thanks very much for being with us.
Pleasure.
I appreciate that. I'll get you to come back after the questions, and I'll get David to come and join us, and we'll go through the next piece of the discussion, the webinar, which is around economic substance. David, thanks very much for joining us. Again, unlike Carl, I'll get you maybe just to introduce yourself first, and just a little bit about Rethink, and then we can talk about economic substance regulations.
Yeah, sure. Thank you for having me, Kevin. Appreciate that. Yes, my name is David Linklater, and I'm a partner and director of CFO and tax services for Rethink. So Rethink is a business service company that provides things like accounting, VAT, recruitment, HR support from an operational perspective, but also from a strategic point of view. We help with business planning, stress testing, strategies, valuations, buy and sell side due diligence, things like that. Excellent.
Thanks very much for that. Obviously, one of the areas that came up is, economic substance regulations, which from my understanding was sort of first initially proposed back in 2019. Just for some of the listeners, do you want to explain what economic substance regulations is? Because some people may have heard about it, might not know, and some people are a little bit more advanced.
Yeah. So really, the way that this came about was the OECD, the Organization for Economic and Cooperation and Development, was getting more and more concerned about what's called BEPS, base erosion and profit shifting, where you may have seen, for example, in the press, certainly in the UK, where you've got very large corporations such as Google, Facebook, IKEA, with huge turnovers, but practically paying nothing in taxes. And the way that they did that was to park their IP, their intellectual property, into low tax jurisdictions and rent that IP out through to the rest of the world, thereby drawing profits through to this low tax jurisdiction. So the European Union blacklisted the UAE for that as being, and I quote, an unsympathetic tax jurisdiction. An economic substance is a way by which the UAE is trying to address that, get off the blacklist, by ensuring that companies with relevant activity have economic presence as well. What do you mean by economic? What do you mean by relevant activities? There are certain businesses that are going to require to prove their economic substance. A lot of our listeners, I'm sure, will not be on the list of the bigger companies such as banking and insurance, but they may fall into a holding company. They may have some intellectual property. A lot of them may be distribution and service centres, for example, which will be within economic substance legislation.
And I guess why? So if I take it back to sort of a lot of SMEs, and whether that's business owners looking to set up, why is it sort of important that they sort of understand this legislation?
Yeah, well, I think that's an interesting question, because the legislative landscape of the UAE has changed markedly over the past few years. I mean, look at 2018. That was the introduction of VAT. And I don't think that in itself was a bad thing for the UAE. And it certainly was a good thing, I think, for a lot of the SMEs. But now you've been introduced and forced to use systems and controls, whereas in the past you never used those. You relied upon, gut feel and perhaps black magic or whatever. But now you're relying on facts and KPIs, real solid data to drive your business forward. And one of the things we're very, very aware of is that non-compliance in the UAE is a real depleter of value in businesses. So all licenses now have to assess whether they fall in the scope of ESR. And a licensee is a limited company, for example, a public company, a joint venture company, for example. But there are some exclusions as well. I mean, an actual person would not need to register for ESR, neither would a sole proprietorship, a trust, or a foundation. When we're looking at this, we're talking about we look at the three main considerations whether a company needs to comply with ESR. And one of those is, does a company conduct business in the UAE? Clearly, if it doesn't have to comply with that substance test. Has the company conducted relevant activity? We just talked about a few of the relevant activities. If it doesn't have relevant activity, it doesn't need to pass an economic substance test.
Yes.
And has there been income generated in the period? And that's a key one as well. So although companies can be set up with a vision of performing a relevant activity, if it has no income, it doesn't need to conform to the economic substance test.
I was going to say, I think, on that, you probably maybe somebody slightly answered even some of the further questions. So I think that, there's some finer details in there, which I think we'll go over. The actual report itself, I guess what sort of detail or information is in there, just to get an idea?
Yeah, well, the economic substance, it tells you what you need to do to get the economic substance. It tests that in actual fact. And there are three core pieces to this as well. So the licensee of that relevant activity has to be directed and managed in the UAE. So the board meetings have to be held here. The senior management has to be here. And we're recommending that there's at least one meeting, probably two would be better. The board members have to be competent as well. They've got to be the business and recording those minutes of meetings as proof they've actually had those strategic decisions made. Core income generating activities have to be here. That has to be conducted in the UAE, and the company has to have people and expenditure commensurate with the activity and size of the business. So those three elements together determine whether or not there is economic substance within the UAE.
And then I guess that top and tails to the next point. What are the penalties for non-compliance that could occur?
Yeah, like I said before, penalties in the UAE can compound really fast and can really debilitate a business very, very quickly. And ESR is no exception. So there are two parts to the ESR reporting. There's a notification, which is everything's done through the Ministry of Finance's portal. So the notification, and if you have relevant activity, it's followed by an economic substance report as well. But failure to notify carries a 20,000 dirham charge, which is in itself pretty severe, but it's not as bad as the economic substance report. If you fail to submit one of those, that's 50,000. And if you're inaccurate, if there's any inaccurate information provided, that's a penalty of 50,000 also. Failure to submit the report, the first penalty will be 50,000. In the subsequent year, it can be 400,000, which is huge, and the license be suspended or withdrawn altogether.
So obviously, it's important for any business to understand where it necessarily fits. How often does a business have to update or amend, I guess, its ESR? Because again, different people will have different perceptions. Yeah, well, the requirement to file is annual, so just give you a sort of deadline to that, if you like. So the ruling is that all companies with a year end starting on or after the 1st of January 2019 will have to comply with this. So that make it more relevant. So, for example, if a company was registered on the 1st of January last year, 2020, year end 1st of December 2020,
its notification date will be June this year, 2021, and its annual and its reporting date would be the end of the year, the 31st of December. So, yeah, it's fairly straightforward. There's not you have long periods of time there. When you do deposit your report, there's a likelihood that you would be asked certain questions by the Ministry of Finance. No question with that. No issues with that. But to amend it, we recommend you obviously amend the report prior to the end filing date. After that, you may obviously incur penalties.
Great. Okay. Just for the last questions, and then we'll probably just go to the Q&A afterwards. How do you calculate the ESR deadlines every year?
It really is determined upon the year end. So if your year end is within, so year end's coming within say 2021. Your reporting date would be, your notification date would be 6 months after that, and it's really related to the.
So it follows the same cycle, basically.
Yeah, it's the same cycle. Yeah.
No worries. And finally, what is the notification and substance report?
Well, the notification is a report that goes in after the 6 months. So it's a lighter version of the full substance report. So anyone that's got relevant activity has to submit the notification, but those people that are exempt as well will also need to file that notification. What is an exempt license? So typically for our audience, that would be, say, for example, a company that is solely within the UAE and trades solely within the UAE. So it's really contained completely within the UAE. If it trades outside, it's not an exempt company. So these people have to notify and prove that they fit in with that notification as well as being an exempt licensee. So that would be things like, residency, shareholder agreement.
Yes. Yeah. And I assume as the business grows, there'll be changes that come along, and so then that will change their exemption as well.
Yeah, and that's why you really need to keep an eye on this, because it's substance over form. Although your license may do one thing, but you actually do another, it's what you actually do that's important.
Yeah. Well, look, David, thanks very much for that. I appreciate that. And I'll get you to join back, or in fact, you can actually leave your video and your webcam on. I'll get Joe and Carl to join back in. We do have a few questions that I'll sort of shoot through, so I'll try and maybe direct them to each one, and then see how it goes from there. Before I ask the first questions, for the listeners, as I said, we have a knowledge sharing effort that we're doing. So you'll see there should be a poll there about some upcoming other knowledge events and webinars that we're looking to hold, and it'd just be great to get some sort of feedback on the interest from those people listening. I guess there's a first question here, and I'll sort of maybe push it out to probably Carl or Joe first, I think. With these changes to foreign ownership, and it's kind of a tough one, but what other policy changes do you think we could anticipate for 2021? Carl, Joe?
Carl.
Carl, are you there? Because his internet is, yes.
He's contrived that.
Yeah. So, are you there, Carl?
So I'll turn my video off. Yeah, sorry, I'll turn my video off. I hope you can hear me okay.
Sure.
Look, I'll put my point out. I don't know if you'd have the same thought here, Joe. I think as controversial as it may sound, it may not be a 2021 item, but it could be 2022. If the changes to local ownership are quite liberal and across the board, it would be, I guess, sensible to think that there would have to be a taxation regime expected on the horizon. Again, it's just a view that I have. If the individuals Emiratis are not going to have a larger participation in the companies, then I think it is fair to say to keep the UAE ecosystem healthy, they would need to have a taxation regime. What that ends up being, who knows? But I think if we see quite a change from local ownership to significant foreign ownership, then I'll see that on the horizon. What are your thoughts, Joe?
Thanks, Carl. Joe, David?
Yeah, I mean, I'd agree with that, and I think, you know, a move towards some sort of corporate taxation is quite possible, if not probable. And I don't think, you know, you turn the lights out if that happens. Well, you know, that there's already corporate taxation in Qatar. There's already corporate taxation in Saudi. I think as long as it is offset against fees, you know, we're effectively, you know, it's a fee-based economy, and, you know, if you're paying a corporation tax based on your profits,
yes,
I don't think you'd have a problem with that. And obviously with the Federal Tax Authority, you've got the, you know, you've now got the infrastructure in place to actually start doing that and whatever. I mean, you know, my personal feel, sort of working this is, you know, in the last 6 months, we've had Israel come into the fold. We've had, you know, changes in these laws, okay, yet to be corroborated. We've had changes in the sort of personal social laws around, you know, in terms of some of the, you know, things for expats here. We've now just had Qatar, you know, 2-3 weeks back, come back. You know, I'm sort of excited by the sort of and I'm not suggesting that those things are all related. They're, you know, very different. Some are geopolitical, diplomatic, economic, whatever. But I think there is almost a little requirement now to just pause the breath and get some of these things in, get the details of the you know, foreign ownership. What's it going to look like? How's it going to work? Get people shipping and flying to and from Doha again, and all of that sort of thing before we embark on the next round of sort of macro and regional changes. Because I think otherwise companies will just, I think it's quite hard to keep up at the moment.
Yeah, I think, you know, one of the questions actually that's also come through, so Joe, this is probably directed at you to a certain extent, but so you mentioned Israel, but what countries or which countries do you perceive might actually have the greatest FDI in 2021? We've already seen, for example, you know, in the press that China has a greater FDI now than the US, right? So I'm interested to sort of understand what you think it might be for the UAE.
Well, look, I think specific to Israel, and we've already done a couple of projects there, and our feel is that on the Israeli side, whilst there is a huge amount of excitement and interest, it isn't manifesting itself into investment yet. So tell me more and all this sort of thing, and we'd love to find an agent or a distributor or a reseller. But I think that the sort of this idea that there's hundreds of Israeli companies that want to come in and invest is incorrect, is or perhaps too early, and that will come once, you know, I think we all need to see how it's going to work a bit more. So I'm not expecting to see that sort of change, you know, change things fundamentally as far as Israel goes.
Question for David. Economic substance report in relation to a distribution activity. So the question is, you know, can you please help to elaborate on that? Not sure if that's given any more detail on that, but maybe you can help to answer that.
Yeah, sure. This is part of the relevant activity around service and supply. So a relevant activity for a distribution would be when you have a foreign connected person, which can be a company or somebody that directs this company within the UAE, and you're importing goods and you're selling them. It's about connections between a foreign-related party and importing those goods and then selling them, as opposed to the service side, which is, again, a connected person, a sister company perhaps, or a head office, and you're supplying services to that. Those two elements are within scope.
Great. And we've actually got another question, David, while you're there, so I'll get you to answer this one. Somebody said we're a startup raising capital via a holding company registered in AGGM. We're an e-commerce business. What are our IPs from a legal point?
Your IP. So there will be, you have to assess whether or not you're within the economic substance. But IP, if it's purchased or acquired, that's high risk IP. But if it's developed yourself, it's low risk, but it does form part of the economic substance. A holding company for you to, again, you'll have to assess whether or not you're spending money on this IP and parking it thereas. But yes, that'll be low risk IP. But again, something that you'd have to consider for ESR.
Carl, we've had one come here. They said one of the participants is asking if they did want to change their ownership structure to the new foreign one. Do you know what the process is that they'd have to go through?
At the moment, it would be quite straightforward. That is a few assumptions I'd have to say at the back end of this, but essentially it would just be a share sale. So if you have a 51% local owner and it's quite an amicable decision that you can and want to take on the 51% direct, so you own 100%, it would just be going to the notary public, signing a share sale agreement, updating a memorandum and updating your license thereafter. Where I would say to anyone that's looking at taking up this opportunity, it's just to hold your breath a little bit. When the news does come out, I'd definitely advocate that you get legal advice just to read into the details. Amortization, capitalization, I can't imagine that they're just going to say, yes, go to have 100%. With nothing coming back. I believe there will be kind of erring on the early conversation substance. They'll want to see substance in the UAE in exchange. So it'll be worthwhile doing your homework before executing that kind of move.
Great. We've got 3 more questions. And to be honest, they're a little bit more around economic substance report, but obviously Joe and Carl, you'll be able to sort of, chip in. Somebody has said here, David, the business activities that I undertake, they do not meet the requirements of any of the activities listed. Am I subject to ESR?
Depends. It's always worthwhile looking at and examining things, because you may not necessarily be subject to ESR. You could be an exempt licensee, in which case you have to produce a notification as well through the Ministry of Finance portal. And that you are not within scope there either, but you still have to provide the notification, which again carries that penalty of 20,000 dirhams. Okay.
And just on the back of that, they've also said, should I file a notification even if I don't earn any income during this financial period?
No, that's one of the key elements. If you have no income, you don't have to report anything.
Okay, so that's quite a good one for, I think, for some of the listeners. The final one that we've got here, and I'll just sort of run through it before I sort of end the webinar and summarise. Are there cases where a business is only required to submit a notification and not file an ESR, David?
Yes, if they're exempt, obviously, and I think there are a few others as well that need to be required. I can't remember them off the top of my head, but exempt licenses are the ones that we've been dealing with a lot. Obviously, if there's there are some situations where you have multiple relevant activities as well. Some of those will fall by the wayside, but generally speaking, if you've got economic substance and you're in those relevant activities, you'll be required to apply and report.
And just one final one to come through. Do I need to submit financial statements along with the ESR, and do they need to be audited?
Not necessarily audited. It depends on your local jurisdiction where you have your license registered. To produce finances, yes, there are requirements within the report that asking you to produce your P&L and your profitability. So by inference, you have to have your P&L and your accounting done.
Your accounting done, okay. Which again, when we look back at when the VAT was implemented, I mean, it was a great step in terms of shoring up operational best practices, so that way things could actually be better ingested and understood. So I think both of these topics that we've actually covered today, are a very good step for the UAE. I think it's really not just talking about trying to improve it, but it's always trying to innovate it. So Joe, back to one of the points you were talking about when you're talking about businesses that are going to be invested into an FDI. So I think that both these aspects are very good. Gentlemen, I just want to say thank you very much. It's been a pleasure. Obviously, for the listeners, I hope that they've enjoyed the webinar. If they have any questions, they can feel free to reach out to myself, or obviously feel free to reach out to the speakers today. It's been great. Thank you very much. Sincerely do appreciate it. Appreciate your time today. Obviously, just a reminder about the upcoming webinars that National Bank of Algeria is holding. You know, we are trying to really have it where we are a knowledge share. It's a knowledge sharing perspective that we're trying to take to really try to, you know, help and develop, you know, SMEs, you know, to better move forward in their business. So yeah, please have a look at the nbfconnect.ae, because we do publish it all there. So if you haven't signed up, please have a look at that. But otherwise, gentlemen, thank you very much. Pleasure. And for all of our listeners, thank you very much for joining us. And I look forward to seeing you all next time.
Appreciate it.
Thank you. Goodbye.
Thanks very much. Okay. Bye-bye.